old school like back in the day. Air raid, old school like back in the day. Air raid. Air raid, old school like back in the day. Air raid. Air raid. We done already been a baseline. 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 The baseline, the baseline. Old school like back in the day. Air raid, old school like back in the day. Air raid, old school like back in the day. Air raid.
All right, welcome back. Sorry about that intro. I was just trying to be as ridiculous as possible. So what's going on with the markets? Well, as you can see, I took a pretty big hit. For the week, I'm down another almost $50. And so overall, I'm down $106 since I started. So these last 2 weeks have been pretty rough. So the question on everybody's mind is, are we heading into a recession? Are we heading into a bear market? And I've always been kind of bearish because I've historically invested in silver. So I've kind of lost faith in the US dollar. And I think the market maybe has one last good push in it left. And then there's two reasons I think that we're going to enter a bear market. The first is tax cuts are only good if they're cutting taxes because they're spending less money. So if the government dials back its spending and therefore doesn't need to collect as much revenue and therefore cuts taxes, that's a good thing. But if you cut taxes and you increase spending, which is what they're doing, they're going to increase spending. I was watching Rand Paul said it by like 20%. So they're going to cut the taxes, so they're bringing in less money. They're going to increase the spending. That ultimately is going to increase the deficit. So why does that matter? If you increase the deficit, then you take confidence out of the dollar. So if you take confidence out of the dollar, less people are going to want to buy a treasury note. So the bond market will go down. So to entice people to buy treasury notes, they have to raise the interest rates up. And if you're raising interest rates, then you're going to take money out of the stock market. You're going to see the stock market start to fall. So I think ultimately, between the combination of potential inflation and the deficit going up, I think that's going to spell disaster. And the other issue I think I have with it is the other issue I know I have is the fact that the U.S. dollar right now is a world reserve currency. So people have to trade in dollars. And major countries right now are looking at alternative methods. So you've got Russia, India, China, and I think even Germany looking into a basket of currencies to trade as the world reserve rather than the U.S. dollar. So rather than being gold-backed or U.S. dollar-backed, which was tied to gold before Nixon, now they're going to abandon the dollar as the world reserve currency altogether. So what does that mean? Well, it means that no country will have any reason to hold on to the dollar, like they have been historically since World War II. So if no country needs to hold on to the dollar anymore, all those dollars are going to flood back to the United States, and you're going to get a hyperinflation situation. So when you combine hyperinflation and rising debt, I don't see how it could be viable. I just don't understand how it could be a feasible system. It just seems like it would bubble up so high and then pop because it's really a fiat currency, and it's not based on anything. So it's paper, which means it basically can be an infinite supply. So when you were backed by gold, then your currency was stabilized because there's only so much gold on the planet. So yeah, you can mine more, but the planet itself only has so much gold. Trees are renewable, so there's an infinite number of dollars. And that's one of the reasons why Bitcoin became so popular, was because there's a mathematic limitation to the number of Bitcoins that can exist. So it's a limited currency, unlike the US dollar, which is a potentially infinite currency. So what am I going to do? I think the best plan so far is, one, I'm entering into SDS, which is a bet against the market. So I'm using this as a hedge against my current investments. So am I going to panic sell? Absolutely not. As I stated before, I'm a long-term investor. I'm gonna keep these for the long term. So here's my plan. I'm going to bet, and on my TD Ameritrade account, I'm putting in DJP, which is a commodities ETF. So my plan is bet against the market, ride the wave down with SDS Pro Shares Ultra Short and my commodities ETF. When I feel like I'm at the bottom, I'm going to take that money and buy more of the stocks I already have, since they'll be at a discounted rate. They'll be cheap. And my plan is to ride it down, buy more at the bottom, and then ride to the top with my cheap shares plus what I have now. So I'm not going to panic sell what I have. I'm just going to invest more into basically shorting the market, or trying to profit on the downside. So that's my plan. So in the meantime, I'm still looking for value stocks, and one that came up was EQT. So each video I want to discuss like one pick that I found that I like, that I've been researching. So EQT Midstream Partners, and here's the website if you want to look them up. Again, they floated right to the top of my Excel calculator. And unlike some other things that floated to the top, EQM is actually basically on sale right now, because the intrinsic value price using the Buffett Books calculator, and I'll put the link to that calculator in below, but using that calculator, the intrinsic value is $103, and right now it's trading at 67.07. So between the fundamentals being really good, show you, I'll run through it real quick. The price to book value is not bad. It's got a really great PE ratio. So when you multiplied them, it was 35. So I want below a 22.5, but 35, it's okay when you see the rest of it. It's got a great yield, 5.58, with a 5-year average of 3.2, so it's above the 5-year average. The return, which is 1 divided by the PE ratio, is 7.8% return, which I like. The debt to equity, which was right where I want it. I want it below 0.5. It's at a 0.52. And the current ratio is a little bit low. That was really the only downside, besides the PE, price to book times PE being a little high. But when I calculated it all out, it floated to the top. And the best part is it's only about 69% of its value as far as price goes. So that's one I'm looking into, and I'll just dig into the financials real quick. Cash flow, 2014 was 284 million, went up to 455 million, and then 537 million. So it's just a constant increase, which I like to see. Total cash flow from operating activities, same thing, increasing trend. Investing, every year they're investing more money, which is nice to see. And then financing, this year, the last year posted, they're actually paying off more debt than they were taking out. So that's a good trend. So again, I'm going to wait for the 2017 earnings call. If it's a good earnings call, I'll buy. And if the investors don't like it, then typically I've seen the stocks sort of decrease, and I'll buy on that. So if you think a recession's coming, one thing you might want to do is get companies that aren't over leveraged, so companies that can survive an interest rate hike. So you got to think, if a company's got, let's say their debt to equity ratio is like a 1 or higher, and they have more debt than they have equity, and then all of a sudden that debt costs more money because the interest rates are going up, then that company's probably not going to survive a recession. So if you are going to continue to invest into a recession, then I think the best thing to do is look for companies that have a really low debt to equity ratio. So that way when the tough time comes, they're going to be swimming, not sinking. And this one looks great. I mean, let's look at the balance sheet. So their total assets are looking at 3 trillion. I'm sorry, 3 billion, and total liabilities 1 billion. So they're not in any sort of trouble. So I'm going to keep an eye on this company, wait for their earnings call, conference call, and I'm going to sit in on it and listen to what's going on. And then I'm probably going to start moving forward into this company as well. And also just want to look at MSN Money. Just that's where I got the debt to equity ratio and the current ratio. And I'm using Morningstar to get my data that I feed into the Buffett's calculator. Just one mention from a past video, I'm going to look at Corning. And the nice thing about Corning was it did exactly what I thought it would do, and it went on sale. Yeah, around here in the, I think I started looking at it around in this area somewhere, but it was above $30. And now it's at $28.77, and it doesn't look like it's moving down much from there, aside from whatever might move down if the whole market crashes. So I entered Corning. I took a position yesterday. I think it was yesterday. And I made like a $500 position in Corning. And I think that's going to be a really nice company because, one, Gorilla Glass is amazing. Like my wife mentioned that she's had Gorilla Glass on her phones, her like past 4 phones, and she's never had a shattered screen. She's had like a small fracture crack, but it never did like that full shatter where you can't see your phone. So between that and between wearable tech and the glass that's going in on the smartwatches and the glass that's going into what I think is going to be the future, which is augmented reality glasses, if they own that market, the more that those technologies increase sales, the more that Corning's going to increase sales. So it's kind of like symbiotic to sort of piggyback on the next digital trend, which I think is wearable tech. That's what I see. I think that the day of holding your phone and kind of just holding your phone while you stare down it, I think that's going to be gone. If you research on YouTube some of the wearable tech videos, it's amazing. Like it's mind-blowing what they have already out, and it hasn't really hit a consumer market status yet, but the technology that's there is really impressive, and the days of holding your phone and staring down at it are going to be gone, and you're gonna just see basically reality with everything that you were looking on your phone just off in the distance somewhere on some surface. So that way you get your vision and the information that you're trying to get off your phone. So if Corning's behind that and Corning's making the glass for that, then that's going to be a really healthy company in the future. So I'm taking heavy positions into Corning, and I'm going to start going into EQM as well. All right, so that's that. That's my rambling. Let's look at my goals real quick. 200 invested. Yes, I got that invested again. I'm on target. I didn't put any extra in there for any reason, so I think I'm right where I'm supposed to be. Sober. Yes, sobriety strategy. So one strategy I did early on, I haven't done it so much recently, but when I first started, one thing that I tried was I looked up all of the diseases associated with drinking. So like if you actually look at somebody's liver that have, like a heavy drinker all their life versus like a healthy person, those images kind of like burn into your head. And like one that worried me was alcoholic cardiomyopathy, which is where your heart actually swells up, and it's really nasty stuff. So looking at these like graphic photos of like severe alcohol damage and what alcohol does to the body, it kind of burns it into your mind and into your subconscious. Like you kind of just have that in the back of your head at all times. And I haven't had to do it recently, so it's effective because it lasts for a while if you really deeply research like the dangers associated with alcohol, the physical harm to your body. It kind of sticks with you. So it's just another little tool, not like a great strategy, but just like another little tool that I had implemented just to kind of get like a visual. So when I look at the 12 pack, I can just kind of think of my heart like exploding, and it kind of helps. Not to be like ridiculously graphic, but did I lose 6 pounds? Yes, and I lost exactly 6 pounds, and that's a coincidence, but let's look. All right, so I ended last week with 227 even, and I just went downstairs and it was 226.4. And it's a coincidence that it was exactly zero point 0.6, but that's where I am. I swam last weekend, and because it was Super Bowl Sunday, there were no kids in the pool. There was like 2 kids, so my wife and I had the whole pool pretty much to ourselves, which was amazing. That was so much fun. And I'm going again tomorrow, so I'm going to keep up the swimming, and if I slow down on my progress, then I might implement something else, maybe cardio related. Um, I am getting a lot of cardio in from shoveling because in the Northeast we've been dumped on for like the past 3 days, and it just seems like it just keeps coming. So I've been shoveling, and I'm getting pretty sick of it. But it's exercise. So yes, got the weight loss in. Plus 20 subscribers. You know the answer. Nah, not yet. Not sure. I guess I probably need like something viral, which means I probably have to come up with something interesting to say, which I doubt I'm able to do. So I've got nothing so far. But yeah, so pretty much on target. That's my thoughts about the market. Just to sum it up, I think there's potential for a disaster. I mean, am I saying that the market's going to crash tomorrow? Probably not. It probably has like one last long sigh before it dies. So we might even see like new highs before it goes. But I just don't see any way around it really. Like I don't understand how you can print your own money, and then when you run into a financial situation because you printed your own money, your solution is to print more money. Like it just doesn't seem like a viable solution. And now that we're unhinged, thanks to Nixon from the gold standard, it may work in the short term, but in history, there's never been a successful fiat currency that didn't implode. So I think it would be naive to think that the U.S. dollar is going to be the first one ever. And I think that when it does crash, it's going to probably be the worst crash we've ever seen, only because there's more free money in the system now than there ever has been. And I just think it's a recipe for disaster. I don't think it's a very good, sound monetary policy to just be infinitely fiat. I just don't have a lot of confidence, and I've been saying that since 2010. So if any of my family's listening to this, they've probably heard me say this a million times. But that's why back then I was investing in silver. That's why I got interested in Bitcoin. I think I shared my Bitcoin story already, but I got out with a profit, but I got out way too soon. But yeah, I just never really trusted the dollar because it's just historically that kind of system never works out. But I hope everybody the best, and I'm rambling. Thank you very much for watching, and stay sober and stay profitable, and good luck with these crazy, crazy markets because there's a lot of volatility. So watch your backs, and have a good one.